Hi everyone, Andre here, Wealth Wingman of Team ProsperUs. Okay, so today we'll be going through the product mechanics of CFDs. All right, so pretty much all you need to know on what to look out for when you're actually doing CFDs on our platform. So CFDs are only available in the Boost platform. Okay, so you can't do it in the Build because Build is only cash products. So once you actually open up the trade ticket here, all right, just a couple of things to note. So once you actually key in the quantity of shares that you wish to buy via CFD, you can do that here, or you can click on the notional amount that you wish to purchase. All right. So at the bottom here in the details, you can see that cost-wise, it's $1.20 USD. Nominal value essentially is the number of shares multiplied by the price. Okay. Initial margin available is how much margin you have available in your account before you can actually execute. So as you can see now that the initial margin available is lower than the initial margin impact, you will be able to execute this trade. If this initial margin impact is higher than your initial margin available, you won't be able to execute the trade. It just basically means you do not have sufficient margin to actually execute this trade. So initial margin and maintenance margin. So maintenance margin is what is required for you to hold the position over time. So it's different from initial margin. Initial margin is what you need to place the order. All right, and at the bottom here, you'll see interest per day. So that's how much financing you're going to have to pay per day based on a notional value of 66,000. So to give you, to go into greater detail, okay, you can go to the trading conditions at the top right here. So once you click on that, you can see trading conditions on the commission charges. So it's 0.012 USD per share, all right? And these are actually the financing charges. So if you go to cost and key in that same amount, this would be an indicative amount of what you'll be paying for a holding period of 1 month. So the cost would be 12 USD because 1,000 shares multiplied by 0.01 per share, all right? And as you scroll further down, okay, you can see the financing charge here as well. All right. So do take note there are certain assumptions taken on this based on the price that you on the last close price. Okay. So this is of course just an indicative rate. Next, we can go over to the instrument tab here, and it basically shows you the margin requirements of the instrument. So for an exposure 0 to 100,000, okay, you can see initial margin 20%, maintenance margin 15%, and that increases as your exposure of the specific product increases. Okay, next we can see here that the information on specifically Tesla is listed. Tesla CFDs is listed on NASDAQ, sector automobile. Minimum trade amount is 50 USD. So this is a notional amount, not the margin. So you can see here short selling is allowed for this instrument. However, do take note for your riskier instruments, sometimes short selling might not be allowed. For example, your meme stocks, AMC and GameStop. Exposure limit is how much shares you can actually have. So this can actually be changed on a case-by-case basis because we don't want that to be concentration risk as well. Okay, you can see over here that there's ISIN available, and at the bottom here, the trading times for the market. So do note pre-market here is before market open. You can place that order you can place a pre-market order under algo trading order types. All right, so that's pretty much it for CFDs. If you do have any questions at all, please feel free to reach out to our ProsperUs team and we'll be happy to get back to you. Thank you.